Hi there, welcome to Kneppy Invest and welcome to January 15, 2025. There's about 27 minutes left of trading today. Time is currently 2:42 p.m. First thing I should mention is my standalone video on Friday will be released quite late, so gentle reminder. When I say late, I'm meaning 9:10 p.m. I will be busy all day, won't have time to record a video, and that's probably the first time that's happened for quite a few months. I have just recorded a video, no stock of the day today. And the whole reason there's no stock of the day is no company stood out. No company stood out from the crowd. No intriguing announcements. No wild share price movements that I do know of. I might have missed one or two. And so instead of doing a stock of the day, what I've done is I've answered one of your questions. This question comes from your Frenchman who asked me about defensive stocks. So I've answered that question. In fact, there was two questions, defensive stocks and how we use defensive stocks. So look out for that video. I'll probably release that this evening or tomorrow morning, 16th of January. I was going to record another video on why I took a position in Mika Metals. And I think that could be an interesting video. And I was just about to hit the record button, and I thought, no, I can actually do that tomorrow and maybe release that on the morning of Friday, the 17th of July, to give you something to watch, or maybe even the afternoon of the 17th of July. Okay, so let's have a look at the market today. Actually, before we have to do that, what's the agenda of today's video? Well, it's exactly the same as all other videos, except there is no top 5 stocks. Only 6 companies release sort of interesting, intriguing announcements today. A couple of Appendix 4Cs, a trading update from Baby Bunting, a nice little update from a company called Compumedics. And yeah, it's really just Appendix 4Cs and 5Bs. But we'll have a look at the best performing and worst performing companies. I might have missed one or two. Interesting day in the market today. And the reason I say that, we're in the red. Yeah, we're mostly in the green all day. Yeah, we have seen the XEO and XEO dive since about midday. So it was up for most of the day, and we've just seen a little bit of weakness. Maybe American futures are down. Maybe there's been some interesting economics news release today. I actually haven't looked at the Trading Economics website. US producer price rises less than expected. That's interesting. Indonesia trade surplus hit 10-month low. Not of interest to me. It all fluctuates as traders weigh outlook. Okay, so nothing of dollar rally stalls ahead of CPI report. So nothing of massive note here. Gold down a little bit. Even commodities, not much movement except natural gas has pulled back a bit. The other thing I'm going to look at is actually Capital Brief. Actually, we'll do that. Actually, no, let's do it now, just in case I've missed something. I do actually like to look at this before I start recording the video, but today I just haven't done it. A little bit lazy today. The quantum crash, recent comments by NVIDIA's Jensen Huang triggered a slump in quantum computing stocks. Okay. Baby Bunting extends gains as city upgrade stocks. So we'll talk about Baby Bunting later today. Liontown leads lithium rally as Morgan sees positive outlook. Still don't understand why people buy off changes in brokers' price targets or whatever. But it seems like share prices rally or drop a lot because of that. And yeah, we don't see much. Just Baby Bunting again. Neuren shares dive despite EU regulatory progress. Let's have a look at the definition of their dive. Neuren Pharmaceuticals. Oh, it has dived a fair bit. It could be just a little bit of profit. Yeah, the share price is in a bit of in fact, we'll have a look at the chart for Neuren later in the video. Let's do that. Yeah. And there's a takeover bid for AV Jennings. And there, yeah, Macquarie upgrade, so Media's up. I don't understand why people will buy because Macquarie says it's an upgrade. That's just weird for me. Anyway, to me, it's weird to me. Anyway, people aren't making their own decisions. They're just leaving it to other people, and that's where you go awry. When you leave your decision-making to other people, it's your life. It's your life. Make the decisions yourself. Anyway, let's have a look at the best and worst performing sectors and indices. And yeah, it looks really bad, doesn't it? So a couple of sectors up, well, 3 up, but they're not up by all that much. And telecommunications, IT, industrials, healthcare and energy, all down by more than 0.5%. So it's just weird that the market's not down all that much when you have a look at this, the overall indices, but yet all these sectors are down big. So what's going on? What's going on? Gold's up a fair bit, up 1.24%. Financials, yeah, it looks like the bank's probably flat today. ASX 20 down 0.33%. Let's have a look at the ASX 20. I'd probably say probably 13 companies up, 7 up, 7 up, 13 down. Close. 6 up, 1 flat, 13 down. And anything of interest here, WiseTech, bit of weakness in tech again. Funny enough, I can't remember what happened on Wall Street overnight. I don't know why. I thought it was in the green. NASDAQ down a little bit and Dow Jones up 0.52%. Why is there weakness in tech? It's just one of those days where the ASX just goes on its own tangent. Okay, so let's go back. WiseTech down, and the best performing companies, Fortescue, ProMedicus, QBE Insurance, ANZ, so a little bit of a bounce in some of the banks, particularly ANZ and National Australia Bank, which I would say definitely ANZ is the cheapest of the banks. NAB might be, I'm not sure about NAB and Westpac coming in 2 and 3, but definitely CBA is the most overvalued, and that is actually down. So maybe there's a bit of a rotation from CBA into ANZ. Okay, let's have a look at the top gainers and top losers today. You can actually see this ASX 20, it just has collapsed since about 12:30. So there might have been some news released about 12:30. Do we see that on the, let's have a look. You can actually sometimes see economic news being released. Yeah. No. In fact, 3 hours ago, there was a sort of a news article. Australian shares rise for second consecutive session. Whoops. That news is old now, isn't it? It's old now. But anyway, so something happened around midday. Maybe it was just brokers, went to lunch, had a bad lunch, came back to the office and just hit the sell button because they were all sick. Maybe that's what's happened. Anyway, let's have a look at this is really interesting because a lot of times I will have a look at the top gainers and top losers before recording. Today I did not. I've gone into this blind, and that can be exciting because, for instance, Ovanti, OVT, up 22% on a fair bit of turnover. I would say this is a fairly low quality company. Ovanti, I'm just thinking printing. I could be wrong there. Nothing of note released by Ovanti. And I also say this chart looks pretty meh. Ovanti. Yes. Nothing of massive note. Massive volume coming in. Not sure was that a takeover bid or something? Let's have a look. 17th of October. What happened on that day? 17th of October. Oh, I remember this now. Ovanti appoints former Zip CFO as CEO. For some reason, the market got really excited that the Zip CFO, not CEO, CFO is now the CEO of Ovanti. Yeah, that's still, it just explodes my mind that people would buy on that particular news. Anyway, the market liked it. Share price rallied, and it hasn't really done much since then until today. So some reason share price has gone up today, and maybe they will receive a price and volume query from the ASX. Other than that, Artya, AYI. Let's have a look at Artya. I don't know anything about this company, Artya, and they've released nothing. Let's have a quick look at the chart for Artya. Ooh, that chart looks nice looking chart for Artya. Maybe it's Artya. I don't know anything about this company at all. I've never looked at it. I like the volume increase. You can see a nice expansion in volume over the last 3 or 4 months, maybe 5 months, and that really has coincided with the share price taking off. It's gone from 28 cents to 85 cents. Not sure why this hasn't really popped up on my radar. Let's have a look at the most recent Appendix 4C just to see if they do release it. Yeah, they do release it. Is this company a real company? Is this company selling something, or is it just a story stock? So they have no receipts. So this is just a story stock. I'm assuming it's a healthcare company. They're in the clinical stage. Let's have a look. Commence operations in 2019. Well, don't really have operations because you're not selling anything. Is an applied artificial intelligence healthcare company that works alongside clinicians to improve the diagnosis of coronary heart disease and develop a holistic overview of at-risk patients. The company has developed deep learning AI algorithms that predict and prevent acute coronary events. Does sound interesting, doesn't it? But again, this company is not a real company yet because they're not selling anything, have no cash receipts. Chart looks interesting though. Really interesting chart. Not sure what has caused the excitement, but something definitely has. To be honest with you, this is the sort of chart I do like. Share price in a long-term downtrend, went sideways for a long period of time, now is going up. So definitely interest in Artya. And Arafura, actually, I do remember that they received some funding, I believe. Arafura Rare Earths. Yeah, receives $200 million investment commitment from NRFC. I'm not sure what that is. National Rugby Football Club. National Reconstruction Fund Corporation. $200 million of convertible notes. Total tenure of 15 years and conversion period of 7 years. Non-convertible for first 2 years. This company hasn't really been on the radar for a while. Arafura, what's the ticker code? ARU, was it? Yep. And let's see if this is a breakout. No, I'm not interested in this chart at all. And you can see today the share price, there's been a selling today. The share price has actually gone down from the high, 15 cents to 13 cents. And the whole reason it's been selling is because there's been a lot of shareholders who bought at higher prices and they're underwater and they've seen the opportunity to get out today. So they're getting out. And in fact, I haven't been looking for any companies I want to talk about. My 6 companies. And yeah, there's nothing here. So let's have a look at the top gainers by market cap. Guzmani Gomez, Liontown. That was in the Capital Brief. Navigator Global Investments did release funds under management. I sort of sidestepped this one. I did see it being released or saw it released, and I just went, nah. So assets under management, obviously it's quite positive. Share price up 7.5%. Let's have a look at the chart. The chart was looking interesting 6 to 9 months ago, and the share price then pulled back a fair bit. Yep. So say about 6 to 9 months ago, the share price broke out. Looks like it was breaking out. Maybe not breaking out, but the share price popped up in June by 13.5%, but then the share price just going down. No interest in this chart at all, or this company at all, just based off that chart. What else? So Media is a nice little broker upgrade or something. So people are buying it because they have they can't decide for themselves, so they need to have other people deciding for them. What else? Solvar. Solvar and Step 1. I'm going to have a look at the chart for both of these. So Solvar did actually fall below my sell price. I'm trading this one. Fell below my sell price briefly, but it was really oversold. I expected a bounce, and we're finally seeing that bounce. I'm not sure why the share price has fallen a fair bit. It's just a bit of noise. And when that happens, and it's moved into a support area, it's just having a bounce. So I'd like to see this bounce keep on going for a while. And the other one was Step 1. This also fell through. Now, a little bit different because Solvar only briefly fell through my sell price, which is there, that dashed line. I've got a really much lower get out of this hellhole sell price at $1.14. So that's that orange line. But Step 1, not only did it fall below my sell price, it actually remained below for about 3 or 4 trading days. And I didn't want to sell for some reason. And the last 2 days we've seen a nice little rally. So I'm not selling this yet. Now, the share price is still in a downtrend, and we want to see a really good volume coming in, by the way, the last 2 days, and we really want to see this rally continue. So maybe the market is thinking the company will release a really good positive update. And that actually could happen because we've seen 2 companies release, 2 realtor companies release a positive trading update. City Chic yesterday, and then Baby Bunting this morning. And I think that's taken portions of the market by surprise because of the negative trading update released by My Holdings and Premium Investments on Monday. Maybe that's what's happening with Step 1. I don't know. But anyway, it's now gone above my sell price. And anything, Baby Bunting. So let's talk about Baby Bunting. Share price up 11.1%. This could have been the stock of the day. Yeah, it could have been the stock of the day, Baby Bunting. Now, there's one reason why it's not really the stock of the day. This is not an upgrade. This is more of things are moving in the right direction, or things are going as we expected. That's the vibes I got from this results update. So let's have a look at Baby Bunting and the results update. So gross margins rising, that's a good sign, from 37.2% to 39.8%. That is one thing I do look at, how gross margins are going. If they're dropping, that's a negative sign. If they're rising, that's a positive sign. So straight away, that is a positive sign. And it also mentioned on track to deliver financial year 25 margin target of 40%. So on track to deliver what they expected. So this is not an upgrade. Comparable store sales of 2.2%. Yep, and comparable store sales growth of 4.5% in the second quarter. Pro forma profit of 4.8 million, up 37%. Debt of 9.1 million, and they are reaffirmed financial year 25 earnings guidance. So you might be saying, well, this is not an update, so why is the share price rallying? Well, it's not a downgrade. That's the most important thing here. Well, maybe not the most important thing, but that's the thing here. It's not a downgrade, and possibly the market was expecting a downgrade. And the market now is saying, wow, things are not going as bad as we might have thought because of premium investments and my holdings. So now this company is a buy. So not really a profit upgrade. And that's exactly what I'm looking for. If this was a profit upgrade, Baby Bunting would have been the stock of the day. So let's have a look at the chart for Baby Bunting. Now, Baby Bunting has been off and on my watch list for a while because it does look like the share price wants to rally. But if you have a holistic or broad view of this particular chart, it's really not doing anything. It hasn't been doing anything for a while. And maybe the weekly chart, you can see that. Yeah, its share price has been going sideways since probably... Share price has been going sideways since about March 2023. So we're talking about almost 2 years. No real trend in the weekly, no real trend in the daily. It was looking a little bit negative before today, and that's probably just a bit of negative vibes within the retail sector. And today is just a bit of a bounce, but not a breakout or anything like that. So that's another reason why it's not the stock of the day, because the chart's not that great and it's not a profit upgrade, or even a revenue upgrade. It's just reaffirmation of their guidance. Oh, on Bubble Watch, I was reading on Bubble Watch. I'll mention this particular article in tomorrow's video. This is from Howard Marks. An interesting article. We'll talk about that. I was going to talk about that in today's video, but I just forgot. Okay. Anything else in the top performers? Andy and Silver. Looks like it's been bouncing nicely. ASL. Andy and Silver back above $1. Yeah. Oh, you could maybe say it's broken out of the downtrend, maybe. Yeah, maybe you could say that. Okay, let's have a look at the top losers today. And no turnover, small companies. Nova Minerals, though, has a market cap of 104 million, and turnover is slightly higher. I don't remember Nova Minerals, although vague. There is a vague hint of a memory there. So I'm wondering if this company did release an announcement. They didn't. Oh, it was 2 days ago. That's probably why it's vague, that memory. So on the 13th, Stybium. What the heck is Stybium? Stybium gold antimony. Is Stybium an actual element? Oh, okay. So antimony has a symbol Sp, which is Latin Stybium. So why do they say Stybium? Stybium is the Latin word for antimony. Okay, that's interesting. Anyway, share price of this company is down 16% today on nothing. Change of substantial holding. Maybe it was driven down by that. Could be. Let's just have a look at the quick chart for Nova Minerals. And I'd say the share price has rallied and it's now pulling back. And maybe this substantial holding is one reason why. Let's have a look at that. So change of substantial holding. Is someone no? The Bank of New York Mellon Corporation has actually increased. No, they've decreased. Oh, the voting power Nova Minerals must have done a capital raising. They must have somehow, because this particular substantial holding, they've increased the amount of shares, but voting power has gone down. They should explain why somewhere here. They're just talking about C and Extra B. C. Okay, oh, here it is. Oh no, I'm bored already. Okay, let's move on. If you know a little bit more about Nova Minerals and what's happening there, I'd love to hear from you. 1 year change in share price is 0. There you go. And everything else here is on low volume, and companies are fairly small. So nothing of note here that I've missed. So let's have a look at top losers by market cap. We'll see some more interesting stuff here. So there's Neuren. Neuren Pharmaceuticals down a fair bit. They did release something today, and I moved on because it wasn't that substantial in my opinion. Trophantide marketing application submitted in Europe. Who cares? It's not negative, it's not positive. But I think this is just noise. So let's have a look at the chart for Neuren. It could be a breakdown. Share price was struggling. And it looks like it was breaking down below. Yeah, there it is. So this is a classic, really negative one-day candlestick. So this level at about $12 was support. It was, sort of oscillating above and below that support level for 2 weeks. And then today, it just sold off significantly. Big volume coming in as well. So that's actually a really negative move today for Neuren Pharmaceuticals. It's not really on any news, but that it can happen at some times. Anything else here? There's nothing else right here that I want to talk about. There you go. Really boring day today. I'm telling you, it was a boring day today. Okay, so let's have a look at some of the other companies that I want to discuss. So I've already talked about Baby Bunting. There's 5 other companies. So let's have a look at Beacon Minerals, which is a gold-producing company. Share price up 8.7%. December quarter production update. In fact, I didn't even have this company on my watch list, my gold watch list. So this came a little surprise when I opened this up and I went, oh, this company is in production. So it looks like the market might have liked it a little bit. Receipts of 26.6 million in gold sales, so not a lot. It's a fairly small company with a market cap of about, if I remember correctly, $100 million? 100 million? 105.66 million. I had a look at this particular announcement. I saw the share price was up, and then I had a look at the chart and I went, not for me. Not for me, Beacon Minerals. You can see the share price it's not really doing anything, hasn't been doing anything for 2 years. Looks like there is a bit of a floor around about 2.1, 2.2 cents, but other than that, I don't really like that chart. It seems like there might be a fair few shares on issue. Yeah, 4.23 billion shares on issue. That's probably a little bit too much for me. I'm even a little bit wary with companies that have 2 billion shares on issue. Well, smaller companies, not the big companies, smaller companies. So that's Beacon Minerals. They did release their production results, quarterly results, and yeah, nothing much else to say about Beacon. Let's move on to AUCyber. I'm trying to remember what this company used to be called. Is this the old Sovereign? They've changed the name. I'm just wondering if this is the old Sovereign, SOV. Yeah, SOV. You can see SOV. So Sovereign something, I think. Sovereign Cloud, I think. Oh, this sort of announcement is going to take 5 years to open up in ComSec because ComSec is really slow. You think the biggest company on the ASX would have really quick systems? No, they have really slow systems. Some people say, well, I have too many tabs open. No, it's not that, because on other sites, the announcements open up really quickly. There you go. Sovereign Cloud. Looks like they bought AU Cloud. Investing Australia's cybersecurity. Now, this is a really interesting one. There's some takeover thingies for this company, takeover bids for this company from 5GN. I'm not sure why 5GN wants to take over this company. Now, I suppose I do. 5GN is a really low-quality company, and they want to take over another really low-quality company. And CEO termination and new substantial shareholder on the 20th of December. I actually didn't know that, but I opened up this particular Appendix 4C. And to be honest with you, there's nothing really much to like. Revenue or cash receipts down at 8.7 million. And when you see receipts that high, you go, why are you not operating cash flow positive? It's because they spend a lot of money on staff costs. Almost $5 million in a quarter on staff costs. So they probably have too much staff. And then I went, for some reason, I don't know why, I read the commentary. And I'm glad I did, because this is an interesting read. So there was a takeover bid for 5GN, and the board recommends shareholders reject that. But what I found really interesting, trading updates, a negative trading update. Let's see if I can find it here. Yeah, it's actually this. The second paragraph of the trading update was a really interesting paragraph. At least the board is being honest. The company's financial performance is materially below the board's expectations based on the internal financial year 25 budget previously tabled by management. On the 20th of December 2024, the board terminated the CEO and Managing Director, Peter Maloney. I actually do like that sort of proactive actions from the board. You're not performing, you're gone. So remains to be seen what happens in the future for this company. AUCyber, I believe, and I could be a little bit wrong, I believe this is sort of a what do you call it? A roundup, merger of a few different companies. I believe that's what's happened. A merger of a few cybersecurity companies. Apart from that, or except for that, I'm not sure what sort of things they do. More of a services thing, which might make sense because of the labor costs. And those sort of companies I don't like. I don't like companies that have a lot of labor costs because people cost a lot of money. Anyway, so the company is not operating cash flow positive, burned through $1.3 million just in operations, a little bit in capital expenditure, and how much cash do they have on hand? $5 million. And then you have a look at the chart, and the chart looks ugly. It's been looking ugly forever. Now, ever. Actually, so way back when it was known as Sovereign Cloud, they listed on the ASX in late 2020 when every other company on the ASX seemed to listed. Share price went as high as $7.80. Now, it could have been, I doubt the share price went that high. So I'm pretty sure there must have been some sort of capitalization in the shares. And the share price has dropped from 780, it's an equivalent at least, 780 all the way down to 14 cents. I've talked about this yesterday. This is the sort of company you don't want to own. This is an absolute capital destroyer. And it's again why technical analysis can work, particularly with these small cap companies who are not profitable and are just not moving in the right direction. You want to protect your capital. And I believe there's two things you want to do. You want to grow your capital. You want to protect your capital. And protecting your capital is really important. And that's why I actually now am a big proponent of technical analysis, because that is one of the best ways you can protect your capital. If you hear a lot of experts who don't believe in technical analysis, and they will have holdings where they're down 90%. Why did you not sell that? Why? And they'll say, well, I have this basket. Some are doing really well. Some are not doing really well. Well, why not focus your attention on those companies doing really well and get out of these companies that are doing hopelessly well? So that is one thing I am transitioning to, using more technical analysis to stay out of companies like this. AUCyber. Is there any reason to even think about this company anymore? The chart is just horrendous. Anyway, let's move on to another company. Orthocell. Yeah, why not Orthocell? I couldn't have this as a stock of the day. Share price down a little bit today. They did release their Appendix 4C. Now, the big thing about Orthocell is not this Appendix 4C. I'd say in 1 year's time, we more than likely will have an idea how this company is performing. Now, I did have a look at the Appendix 4C. I am trading this company. They're still operating cash flow negative. Receipts are growing, albeit slow, up to 1.3 million for the quarter, but operating cash flow negative 3.6 million. But they do point out that they are growing. So they do mention the growth here. Third consecutive quarter of record revenue, 2.21 million. So they're talking about revenue, not receipts. So revenue is a little bit higher than receipts. So they probably do want to focus on the higher number, which is revenue. But the most important thing here is stated, I think in this section here. No, in this section here, talking about the FDA approval for Remplia in United States. So we're going to see if it is approved. And here it is. Orthocell is preparing for US commercialization of Remplia. So following the expected US FDA clearance in late March or early April. So definitely within the next year, we can see how this company is performing. And there's a possibility maybe it's going to be disappointing. So this is one of the reasons sometimes I do wait. I just want to wait to see the first Appendix 4C where we have signs whether the launch of a product is successful or not. And in this case, I've gone in a little bit earlier than expected, or not earlier than expected, earlier than usual with Orthocell. And the main reason behind that is just the chart. So let's have a look at the chart for Orthocell. It's a pretty good looking chart. We've seen a little bit of a pullback the last few days, but that's okay. It's a beautiful looking chart for Orthocell. And if they get further good news, if they get the FDA clearance, the share price will go up, and it might go up significantly, unless the market thinks it's 100% certainty. Okay, so that's Orthocell. They did release their Appendix 4C, but it's not one of the Appendix 4Cs I'm looking out for, and I didn't expect that much from Orthocell in this particular quarter results. Compumedics, share price up 8.8%. You can see in the last month they've released a couple of good announcements, positive announcements, and this company does release positive announcements on occasion, apart from this capital raising in early December. Business update in October was pretty positive, if I remember correctly. Record sales taken, so sales are increasing. They're records. This company is profitable, if I remember correctly. I could be wrong. Yep, profitable. Company financial year 25 guidance, sales more than 55 million. So this is a real company. They're selling stuff, and EBITDA by 5 million. The one thing I don't like is EBITDA will be weighted to the second half due to marketing development costs. I don't like that. Don't like when the company says, well, the results this half not as good as the second half because of this weighting to marketing and development costs. But more than likely, it will turn out the way they think. The situations where I don't like when a company says the results will be weighted the second half is when they're just sort of hoping. They just expect better sales, and a lot of times that better sales expectations don't happen. In this case, they're just saying it's due to marketing and development costs, so they might be right. Financial year 25 guidance to be reviewed at Appendix 4D release, which is February results. So let's have a look at the chart for Compumedics. They've released a few positive announcements. Let's see if the market is interested in this company. That's important. And there was a fair bit of interest in this company back at the end of 2023. That sort of petered out fairly quickly. And I'd say the share price just not doing much right now. No big volume coming through today. Yeah, I personally would remain on the sidelines just now because of the chart and lack of interest in the market. Okay, so I can move on to the next company. And the next company is, SenSen. I've got one left to go. SenSen. Share price up 5.26%. Ooh, I do like this. Buyers and sellers. There's a buy at 4.1 cent, and the next seller is 4.8 cents. So there is no selling right now. No one wants to sell any SenSen. You might say, well, there's been some sellers. Yeah, but no one is that enthusiastic to sell. Now, the next trade more than likely will be above 4 cents. The next trade could be 20% higher than it is now. Anyway, so let's have a look at this particular Appendix 4C from SenSen. Appendix 4C from the company. This is definitely one I'm keeping my eye on. And there are a few things I don't like about this Appendix 4C. Okay. So highlights, third consecutive quarter of positive cash flow with operating cash flow of 1.3 million, previous corresponding period 1.7 million. I don't like that. Don't like that at all. And there's a reason behind that. Now, technically they are right. It is positive cash flow, positive operation cash flow. But let's have a look at their Appendix 4C, and you understand why. Okay. So there's one thing in the cash flow from operations I don't like being there, and that is government grants and tax incentives. In my opinion, that does not belong in the operating section because it's nothing to do with the operations of the company. It's usually a one-off, and it can skew a quarter results or the quarter operating cash numbers. And we can see what happens when that does occur. A company then manipulate the commentary by saying they are operating cash flow positive, even though they're technically not, or not really. If you view the operating cash flow like I do, I would have said this company is not operating cash flow. So you take out that 2.2 million, and in fact, they're operating cash flow negative by 1 million. I just don't like how some companies use government grants and tax incentives to showcase how the company is performing. So you take away that 2.2 million, and yeah, it actually wasn't that great of a quarter. In fact, the cash receipts has fallen 2 quarters in a row. So if you look at this, they are operating cash flow positive, but what I usually do is take away the government grants and tax incentives, and they're not operating cash flow positive. So I sort of did ignore that because I actually did notice that first of all. They have moved from a net debt position to a net cash position that has been helped by that government grants and tax incentives. And delivery of all key projects in Calgary, Montreal, and Toronto. The one thing I'm waiting for in this company is some more contracts. They did release a few contracts in a row. I forget, maybe 5 months ago. When was it? Yeah. So in September, Calgary, August, Montreal, and I think there was another one. I'm pretty sure there was 3 contracts. Montreal, Calgary, and there's another one. I forget when that was released. So it's a while ago, and I'm just waiting for another sign of another tender win for SenSen. And finally, the chart. Okay, so we can get rid of that. No, we won't. We'll leave that there. So I was trading this at one point, then I've got out of the trade, and I'm just waiting for some more signs. So share price has pulled back a fair bit from 6.4 down to 4 cents, and maybe the bottom has been reached. But the other thing you notice is this definitely has signs of a liquidity traded company. So that is definitely something to be aware of in this company. So that's one of the reasons why I'd be probably staying a little bit clear until I see some increase in liquidity. And that's why I pay attention to volume. And volume, we haven't really seen any big volume coming through. So one of the reasons why the share price did rally is because of those contract wins in Canada, Calgary, what was it? Calgary, Montreal, and there's one more, Toronto. Anyway, so that's SenSen. What else is there to say? Yeah, it's not a, I think the market cap of SenSen is maybe 25 million, 31.7 million. So it's not a big company. Anyway. Now that's all I really have for this video, but I'll answer some of your questions. Why not? Let's have a look. I can get rid of defensive. There we go. Drover, livestock herder. Yeah, I know that one. Yes, you're Frenchman. Thank you. Okay, yep. Okay, PC4, ME67. What's your thoughts on Dubbers out of the blue rally from 1.5 to 4.4 in less than 2 weeks? It gets no coverage, but makes no sense to me. I'm staying out of this one. Now, if I was paying more attention to the chart, if I was completely focused on technical analysis, this could have drawn me in. But I am a little bit biased against this company. In saying that, we've seen the share price rally, share price pulled back, and over the last 5 trading sessions, it's gone sideways. That's actually a good sign. That's a good sign that the selling has sort of come to an end, or the enthusiasm of the sellers has come to an end. So there could be another leg up. And look at the volume as well. We've seen a nice increase in volume. My concern about Dubber is just the cash burn. And I don't see any reason why the cash burn is coming to an end. Just based off the most recent Appendix 4C, and they'll release the next one soonish. And we're going back to October. So maybe the market is thinking this quarter is going to be really good, and we'll see if the market is right. And the reason I say that is because if we go back to the most recent Appendix 4C, $9.3 million in cash receipts. They spent $7.3 million in product manufacturing and operating costs and $7.7 million in staff costs. So they spent a lot of money in staff, a lot of money in product manufacturing and operating costs, and they were operating cash flow negative in this one quarter by $8 million. So this company has to experience significant turnaround in their business in the last quarter for me to get excited. Now, maybe they can do it. Maybe they can do it, but I want to see some evidence first. And maybe that's what's happening here. The market is like, ooh, we think it's going to be a really good quarter for Dubber. So I will be keeping an eye on Dubber to see if that has happened. But the chart actually looks really good. Armanio, not sure why Technology One and Xero is falling. Falling. Hopefully this is just temporary. Okay, let's have a look. Technology One first. Well, this would make sense. Tech has been a little bit under pressure recently. Yeah. Now, look at this rally in Technology One share price since May. Share price has gone from $17 to $28.42 currently. It almost doubled in a fairly short period of time. So this little pullback in share price, yeah, it's just a pullback. Tech's under a bit of pressure right now. Share price has fallen another 2%. And you can see what happens sometimes. The share price of Technology One just went sideways for about a year, between May 2023 and May 2024. Share price just went sideways. The other thing is, I'm a shareholder of this one. I've been a shareholder for a while. P/E ratio is 80.57. If you had a look at the historical P/E ratio of this company, I would say right now it's at its peak. So that would mean there is a lot of positive vibes around this company. What I'm going to do now is go to FinChat. Just look at the historical P/E ratio of Technology One. And the easy way to do this is go to financials, go to ratios. Now, the problem with P/E ratio history is sometimes you get a weird result. So the P/E ratio could be really high or really low. Maybe that's what won't happen for this particular chart. No, it doesn't. So this is the 10-year P/E ratio for Technology One. And I would say, based off this, it did increase a fair bit in 2019. So I'm going to exclude that period. But whenever the P/E ratio gets above 60, that's historically means the company is overvalued based off historical P/E ratio. When the P/E ratio gets below, say, 40, that could be a good time to buy. So we're talking about between 60 and 40 is sort of the normal range. We typically see the P/E ratio for Technology One. Right now it's at 80 or just below 80. So it is above what you typically see for this company. So I wouldn't be going out there and rushing and buying some Technology One share price just because of the chart. So just keep that in the back of your mind, that the valuation of this company might be a little bit stretched right now. So any sort of pullback in the share price is probably a little bit normal. So that's Technology One. And Xero, probably the same thing. We've seen the technology sector under a bit of strain the last few days. So it would be very normal to see a bit of a pullback in the share price. And, well, this is just noise. This is not as bad as Technology One. This is a little bit of noise. You see this all the time with companies like this: a pullback, little bit pullback. There's nothing to fret with Xero right now. I'm not going to do the same P/E ratio history or thingy as I did with Technology One, because Xero doesn't have a long historical P/E ratio. It's been non-profitable for the longest time. Okay, so in my opinion, nothing to really worry about with either of these companies, but Technology One, in my opinion, is probably a little bit overvalued right now. And this sort of pullback is probably normal. And don't forget, share prices of companies don't go up in a straight line. You're going to see share prices of companies pull back significantly sometimes. Video Associate says, what do you think of Propel Funeral Partners for growth in 2025? I'll be honest, I stay clear of any funeral homes. I will tell you this much. I would say they are always needed. People always, well, maybe not. Who knows? Maybe one day these sort of companies won't be needed. Maybe death will be cured, maybe not cured, but solved, or aging solved. And I wouldn't go past humanity or humankind or human ingenuity, humanity or human inventiveness to solve aging. I think it can be, maybe in our lifetimes. Who knows? And then maybe this company won't be needed all that much. I don't follow Propel Funeral Partners at all. Do you expect a ramp up in people dying in the next year? So that would increase the need. I don't know. Would this company have a moat? Why would it have a moat? I don't see why a company like this would have a moat. How did you distinguish this company, this funeral home, from other funeral homes? Maybe their service. Maybe they have really good service. I don't know. Just going to have a look at the weekly chart. Now, if you have a look at the weekly chart, the share price actually a nice little weekly uptrend. since 2021. P ratio 40. Is that real? If the P ratio is 40, no way. That's saying there's going to be significant growth for this company. Yeah, anyway, I have no thoughts about Propel Funeral Partners, but that P ratio does concern me a little bit. It is fairly high for a company that I wouldn't expect significant growth. Okay, Bioxen. Paul Nicholas, can you have a look at the FXG chart? They have gold and antimony projects in US Alaska. Is there Alaska that's not US? I don't think so. I think there's only one Alaska, and that's USA. Maybe I'm wrong. FXG. I don't know what this is called. Felix Gold. Ooh, hello. Weekly chart. There is a bit of interest in this company. I probably wouldn't trade it right now. The share price has gone a little bit too... I actually do like this little bit of reasoning. Share price has gone a little bit too far away from the moving averages. I can see here a little bit far away from the moving averages in the share price pullback. And the volume too hasn't... I suppose it has. There was a big spike in volume on the 29th or the 28th. Share price up 66% on that day. I would say that's something to do with maybe drilling results. Let's go back in time to 28th of August? High-grade antimony assay results up 15.99% SP. We know now SP is stibium, which is a Latin word for antimony. We have discovered that today. Well, I have anyway. So that was sort of the potential breakout. Yeah. So the share price has just got to a long-term high. I wouldn't be surprised to see the share price pull back a little bit, say maybe to 10 cents. If you see the share price get to 10 cents, that could be a good time to buy if you like this company. And the other thing is, if it gets to 10 cents, it might not pull back, could keep on going up. But the more it goes up, the more likely you're going to see the share price correct and you see some profit taking. And maybe I can do one more. I'm just looking for one with the chart. Alex T. is talking about how you pronounce Rionsil. Rionsil. Ugh, that doesn't sound right, does it? Rionsil. Rionsil. Doesn't sound right, does it? But if the CEO says it, it must be right. Okay. Well, this is interesting. Chris P says, would be interested in the remaining stock list. Kneppy can't hurt. Oh yeah, I was thinking of maybe not giving every company because there's a lot. I'm just giving you the companies that had 2 people voting for it or picking it. And the last comment for the day is Catapult 4. Based on the respective charts, would you say that Catapult and Superloop are in a downtrend, or they're just going sideways after a recent strong performance? Okay, so let's have a look at Catapult. I don't think I'm going to say yes for either one. I don't think they're in downtrends. I would say the share price, if they've pulled back, is just a little bit of a pullback. No, I would not say this is in a downtrend just yet. It's just pulled back a little bit. Now, I'll probably also say that you could get a little bit negative here. So there is a bit of support at about 320. Yeah, it's bounced off 320, by the way. So there is support at that level, but I am trading this right now, and I'm not even thinking about getting out. Not even thinking about getting out just yet with Catapult. And don't forget, yeah, the markets, particularly tech sector, has been under pressure. So some of these companies have dropped. So no concerns about Catapult just yet. Superloop, trading this one as well. I have no concerns about this one at all. We've seen this sort of pattern before. Share price goes on a little bit of rally, pulls back, rally, go sideways, rally, pull back. Yeah, no issues with Superloop's chart at this point in time. Okay, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.